Hi guys, welcome back to the Daily Forex. So in today's video, I'm going to share with you guys, a very powerful strategy that you can use to trade boom and crash successfully. All right, now this strategy is very easy to understand. It's not really that difficult. Okay, so if you put your mind to it, you're able to understand everything that I'm going to say in this video. Okay, so this strategy requires patience, a lot of observation, technical analysis. All right, so we're going to be doing this on the lower time frame and the higher time frame, like the 1 minute time frame and the 5 minute time frame. All right, so but before I get into this, you should know that the boom and crash market, which is the synthetic market on the reef, is highly volatile. Okay, this is what you need to put at the back of your mind, that this market is always volatile, very risky market. So whenever you're trading this type of market, you should always use proper risk management. Now you might be hearing the term risk management. What is risk management? Risk management simply means the way you manage your risk. All right. Now, the way you manage your risk, how much you are willing to risk on this market. Okay. Now, if you let's say you have $100 account and you want to risk about $20 in the trade for a day. Okay, you have a $100 account, right? And you want to risk $20 for a day. You manage your risk. Use low lot size. Okay, you use low lot size and you calculate each candle ticks at a time. All right, when you calculate each candlestick, now let's say if you are buying the crash market, right, you are buying each candlestick that counts for a buy, it gives you a profit. Okay, so now how do you calculate that profit? How do you calculate it in profit and loss? When one candle counts, you see how much it gives you, okay, as your profit. When another one counts, you see how much it gives you. So let's say you are able to get like 10. Now you combine those 10 and that's going to be your profit, right? Then you also combine those 10 and it's also going to be your loss as well for a spike. That means if the spike is dropping down, right? So if you're buying the market, you should know how much loss you would want to have. You should always put that at the back of your mind, considering the loss and the win you want to have. Okay, now I want you to pay attention as I'm about to share with you guys this simple strategy that you can use to grow your small account and make profit. All right, so let's get on with it. So as you can see right now, we have about 5 indicators on the chart, as you can see here, and you can see we have the average directional movement index, relative strength index, moving average, double moving average for that matter, and also the momentum. Okay, now this is really great strategy that you can use to trade the market. You can catch spike with it, and also you can buy the candles for short-term period of time. Okay, for a short period of time when you're buying the candles on the crash market. All right, you can also use this on the bull market, but that's if you know what you are doing on the market. Now, how does this strategy work? So first and foremost, what I'll do right now is to share with you how the strategy works before going to the parameters. Okay, now what we can see right here is there's a line right here, which is, you can see this green line right here, and also this blue line, right? So when this green line and this blue line right here crosses below of the level 5 of the average directional movement index, you go in for the market for a buy. You want to make sure that you go into the market for a short-term period of time. Okay, you just buy the market, take like 5-6 candles, and you're out of the market. Okay, now you might be thinking that, oh, some of this strategy, they look like they look a bit similar, but it's not what you think. Okay, they don't really look that's similar, right? You might say, okay, when we're using the RSI and the MACD, we say when price gets to level 10 and when price gets to level 90. No, it doesn't work like that. Okay, you can see if I put in the relative strength index at that same level and also set this, all these indicators, is not going to match up, right? So each setup goes with each strategy. Okay, so once this green line crosses below this level 5 of the average directional movement index, immediately go into the market for a buy, a short-term buy. Okay, then once both of this line right here is touching this level of 95 here, level 95, you expect a long-term sell, which is spike, a lot of spike. That's why you're seeing that from this point right here, the market dropped, then it bounced again up to this point. Okay, if you take a look from here now up to this point, was a very long sell on the short minutes, on the 1 minute time frame, which is you can see very low minute time frame, which is the 1 minute time frame. And from that point in time, you can see from there another one again. Take a look from that point there's a very long sell from here downwards to this point here. a very long sell before the market start to buy. And when the market start to buy again, price already dropped to this point, which is this green line, and this blue line cross this level of 5. Okay, now this strategy requires a lot of patience. Now some of you are trading this synthetic indices, boom and crash. The thing is that the reason you keep losing or having a losing trade or blowing your account is because you don't have patience. This market requires patience. Can you have patience to see a good opportunity and take 5 candles? Do you have that kind of patience? You just enter into the market without proper planning, proper thinking. You just enter into the market like that without considering that, okay, your money, you need to make sure that you protect your capital. Okay, you don't just go into the market and throw your money away just like that. You want to make sure that you do proper analysis. Okay, now with this setup will already show you good analysis for you to take your buy and your sell on the crash market, right? Your buy and your sell. Now you need patience. All you need, do not think about a short-term sell. Like, let's, for example, right now you see, you would say like, oh, I should have entered into the market at this place at this point right now to catch the spike. Just wait for the perfect setup. Just wait. Once it gives you that go ahead, which is when price gets here, which these two double lines get above this point, then you immediately place here, you place your sell. Then get to this point right now, you place your buy. Okay, you can see that even when it got to this point below the level 5, the market bought for a very long period of time. All right, but it doesn't mean that you should wait in the market for that same period of time, because the market might sell. All strategies are not 100%. If not, everybody will be making a lot of money, right? So you only go in short term, take your 5 candles or your 6 candles, and you're out. Then you place your sell to catch the candles. Okay, now let's go over to the boom market. Let's go over to boom 500 index. Show you that this strategy also works on the boom 500 index right now. So you see right here, be at the level 5 right now. At this point right now, there was a spike. Okay, so immediately you saw that these two lines are getting below this point, which is a level 5. You immediately place your buy on the bull market. Okay, now we're observing that there's going to be another spike. Okay, there's going to be another spike pretty soon. How do I know that there's going to be another spike? Take a look at the market. The market has been selling for a very long period of time, so it's obvious that the market would start to buy again. How do you confirm this? Let's go to the higher time frame, the 1 hour time frame. The 1 hour time frame, let's zoom in a little bit. Now this strategy does not work. It works on the higher time frame, but you can't be patient enough on the 1 hour time frame. That's why you need to scalp the lower time frame. Let's zoom in a little bit. Right now you can see on the higher time frame right now, the market have bought up to this point. It bought for a very long period of time. Now it's selling. Now the market will tend to sell from here now to this point. The market should sell, right? But that does not mean that the market won't buy. The market will not just sell straight red up to this point. It has to retest upwards again for a buy, then it will sell, retest upwards again for a buy, it will sell. Now let me surprise you. This pattern, you see that the market sell at this point, the market could buy again from here, then it will reverse just like this to buy here, then it will reverse like this. It could buy like this, then reverse again before it starts selling downwards. So what you are looking for is just that short-term buy. Now this market should buy, it should retest upward again on the 1 minute time frame. All right, we are looking for a sell, that the market should sell. Yeah, we are looking for a buy, the market should buy. Okay, from here, market, there's going to be a spike that would come and the market will buy, because here you can see even at this point right now, this blue line have gotten below level 5. The red line, same level, so you should see another spike pretty soon, or it might take another period of time. Okay, now I'm going to share with you guys the parameters for you. First of all, on indicator with the 1, you want to make sure that you had the average directional movement index. You put that on period 1, level 5 and 95. Okay, the style plus di 3 pixel color white minus di white color 1 pixels. Click on done. Second indicator is going to be the relative strength index. Period 1, you apply to close level 30 and 70. Style, you want to make sure that color white on 1 pixel with this first trend line. You click on done. Okay, then moving average, period 25, shift 0, method exponential, you apply to close. Style on 1 pixel, color blue on the first trend line. Then you click on done. Then when you're done with that, you want to make sure that you add the moving average again, but this time it's going to be different parameters. Okay, you want to make sure that you put the period on 10, shift 0, method simple, you apply to close. Okay, then you add the style on 1 pixel, color green on this first red line. Then you click on done. Now another indicator which you're going to add is the momentum. Very important. Period 9, you apply to close. Levels, you don't add any. Style, you put that on 2 pixel with color purple, right, with this first red line. Okay, then you click on done. Then you want to make sure that your setup is just as this. Okay, you want to make sure that your setup is pretty much looking like this. Very good, clean setup. Okay, so I believe after watching the video you understand this strategy. You remember, like I said in the beginning of this video, that this strategy is not really that difficult to understand. You practice with it on your demo account before entering into your real account, and you want to make sure that you understand the strategy perfectly before trying it out on your real account. Okay, so if you found value in this video, do it to like and subscribe, and also join my Telegram community, the ZD Forex. On my Telegram community, I share you guys tips and strategies on how to trade boom and crash indices, and also the forex market. And I also have a VIP section whereby I share you guys paid signals, very good with good accuracy. All right, see you guys on the next one.